So what is the chip method? The chip method is utilizing many small trades over the course of a day. So we're not just taking one position and then waiting for that to hit a particular marker and you're holding a position for a day, a week, months even, where swing trading is concerned. What we're doing is we're taking many small chip-ins away off the market day to day. So we'll look at the lower time frames and we'll look at small opportunities. We'll take 30 to 40 pips at a time, which a pip is just the move we're going to take and then capitalize on in terms of when the price changes of whatever particular asset it is that we're trading. You know, like when you're playing poker and you accumulate chips over time and you're placing little bets and you're sort of building it up, that's kind of where the name comes from. So what we're looking to achieve with the chip method is a similar idea where we're not just blowing it on one big trade, we're doing lots of little trades that all add up. So you'll get many, many blues over the course of, days, weeks, months, and that all accumulates, and month on month, we can be pretty profitable indeed. In terms of win rate, you only need a 60% win rate for this as well. You don't need to have a 70, 80, 90% win rate, which, to be honest, a lot of people say they have, and it's probably untrue, particularly sort of your 85, 90% win rates. But with the chip method, you only need about a 55, 60% win rate and you can be profitable over the course, like I say, of months and years to come, which is the goal. We want to compound capital and we want to increase our wealth effectively. So the chip method's built on 4 key principles, and the first one is controlled position sizing. So we're not going to go too heavy, albeit it seems we are in and out quicker and we have shorter stop losses and take profits. We can take larger position sizes. There's still that element of controlled risk because we don't want to, try and, like I say, gamble and blow all our account on one trade. We want to maximize the small move by going in a little heavier, but we also know when we're going to stop and when we're going to close it, which is key. So a lot of the time in the group, I will look at this manually and close manually. Other times I'll put a stop loss on, but either way, I've got a rough idea when I'm going to say, right, we're going to close that one out and we're going to wait for the next one. So controlled risk management is key. So leading on really nicely from the last point of controlled lot sizing, which is just your position sizing, is the risk. So that is the second point. So like I was just saying, we don't want to over leverage ourselves. We don't want to gamble. It can be very tempting, and this is the downfall for many traders. So the position sizing is crucial, and then in terms of how long you're going to hold this trade for. So with the risk management, we don't want to, especially when we are jumping in a little bit heavier, we don't want to think, oh, this is red, I'm just going to leave it and leave it and leave it and get down a rabbit hole and then blow your account. We don't want to do that. So we'll always have a set point where we think, right, we're not going to hold it further than this. We might layer further down. We might put another trade or two in further down, but very briefly. And if it's not coming back, in the sense that our trades further down can then swallow up the red from the original one, i.e. we're going to start banking on the entries lower down, there's a point where we just think, right, we're going to cut that there and effectively preserve our capital. So the next principle is session-based trading. So we'll always take our positions in the US period. So that's the UK afternoon time. We'll take our positions during the US session. I feel like this works really well with the chip method. So especially gearing up to sort of peak time when it opens at 1:30, sort of 12:30 till 1:30 is a good opportunity. And also after 3 o'clock. You do get a lot of news releases sort of between 1:30 and 3 quite often. So particularly at 1:30. So we look to avoid those if it's very high impact news, but generally the US session always works quite well with the chip method. So the final principle is the market's always quite giving. So unlike the housing market where you'll buy a house and then you've got to wait for it to appreciate and then look to capitalize down the line, we can trade the chip method up or down. So like with Forex in general, to be fair, you can trade up or down, you can buy or sell. However, with our method, it works especially well because it doesn't matter what the market's doing. So whether it's going up, down, sideways, there's normally an opportunity in there to maximize on the chip method. Because we're just looking for these short moves, there's always an opportunity there. And that's it. So if you like what you heard and you're interested, you got a few questions or you want to get started, DM me trade and let's have a conversation. Thanks for listening.